Hey, good evening. Happy New Year to you. It is time for today's tax talk. I'm your host. I'm attorney Stephen Leahy. It is Thursday, December 30th, the year of our Lord 2021. Last time I'll say that because I won't be here tomorrow. It's New Year's Eve. I'm not going to do tax talk on New Year's Eve. That'd be crazy. But we're going to do it today. You see my thumbnail, stolen property. You probably saw this all over the place. It's every so many publications are talking about this IRS stolen property taxable issue. I as today's tax talk, I had to do it, and so that's what we're going to talk about today. Won't you join us? Well, it is, again, this was all over this stolen property is taxable meme. I saw it on in the form of a Twitter feed. And then I went about searching, where does it come? Where can I, is this true? And I had people say, yeah, it's true. And it's all over the news. And I think one guy put it on a Twitter feed, and all these news organizations picked it up. It's been on there for 3 days now. It's been on every, as I've mentioned on the show before, I have the Google search set every day. So it sends me IRS, the alerts, Google alerts. And I have IRS, one of my parameters. And so I get any story with an IRS in it. And so I've been getting these stories for days now. And again, then I started searching, well, where did this come from? Was it the IRS feed? Was it on their Twitter feed? And I have their Twitter feed, and I look at their Twitter feed occasionally. There's some good stories on there occasionally. But I could not find it there. And I could not find it I really couldn't find it anywhere. And but I finally did find someone who cited it. And again, as an attorney, you want to make sure that you're passing on the correct information, and you want to make sure that it's accurate. And then where does it come from? So this is what we're going to talk about today. It's from publication 17. So let's talk a little bit about that. First I want to talk about how broad, and everybody knows how broad the law is for the IRS, what they can do to come after you. And so where do we begin? We start at the beginning. Right? The 16th Amendment to the Constitution. So let's put that up there. Let me see if I can blow this up a little bit so you can see it a little bit better. There we go. The Congress shall have power to lay and collect taxes on incomes from whatever source derived, and without apportionment among the several states and without regard to any census or enumeration. And again, because that's what the Constitution said, that all taxes to all the states had to be regarded to census and enumerated. It had to be equal amongst all the states. And so they needed the 16th Amendment to forego that, because income taxes would not be equal among the states. Some states would pay more to the federal government than others because there's more people or more income. And so they had to have the 16th Amendment. And again, it says, from whatever source derived. And that becomes very important, right? Because remember now, many criminals, where maybe they can't prove the crime. They know they're committing crimes. They just can't prove it. Here's the very best example, Al Capone, right? They never got Al Capone for bootlegging or murder or extortion or anything else, nothing illegal like that. What they got him in jail for was tax evasion. Income tax evasion. So that's how they put him in prison, because he wasn't reporting all of his income from whatever source derived. And so they proved that in a court of law, and he went to jail. And that's what happened. And so the IRS in this publication, let's go back to the publication because let's go back to the publication. This is publication 17. Your federal income taxes for individuals. And so this covers everything about federal taxes. Let me put my glasses on because I can't see a darn thing without them. Okay, so this really covers everything. It's more of an instruction manual or sheet for your 2021 1040 S, 1040 and 1040S forms. And so it goes from everywhere from the due date. I talk about this a lot. It's been coming up a lot about this year. It's April 18th because Emancipation Day falls on the 15th, and that's a holiday. And I will do that another time where I'll show you where these dates come from and why that is that it changes. But it from who must file, tuition and fees deduction not available, economic impact payments. 2021 recovery. So everything you need, virtual currency. We talked about this a lot on Crypto Tuesday. You know that on 2019 was the first year that they included virtual currency on the tax returns, and it was on Schedule 1. And then last year, 2020 was the first year they put it on the front page of your 1040, and it's the same place this year. 2021, this virtual currency's there. So again, it lists everything. So then let's go back up to the top because here's the different part 1, the income tax return. So it goes through the income. Part 2, income and adjustments to income. Part 3, standard deductions. Part 4, figuring your tax and refundable and non-refundable credits. So again, and here also your taxpayer rights. They go through the taxpayer bill of rights, the 10 bill of rights, and I always like to point out number 9 of the taxpayer bill of rights, right there on the left, the right to retain representation. So whenever they tell you, when you say, I think I should get an attorney, they tell you, no, you don't need an attorney to pay your taxes. You have that right, and you have the right to use money to buy it, because if you couldn't pay for representation, well, it wouldn't be much of a right. Would it? And so that you have the right to representation. I always like to point that out. But on the part 2 is income and adjustments to income. So let's click that and take us down to part 2. Maybe I'll blow this up a little bit so we can see it a little bit better. Come on. Maybe that's a little bit too much. But anyway, this is salaries and wages, military retirees, household workers, farm workers. How did the new jobs? So they're answering all the questions you might have, changing your withholdings, checking your withholdings, completing Form W-4. Again, so people don't really understand that you can take out as much from your taxes if you know what percentage. So if I file my taxes every year, and most people do, and every year it's about 23% of my income. And I might owe at the end of the year because maybe I have 2 jobs, or maybe I'm getting bonuses and they're not taking the taxes out, and I always have to wind up paying at the end of the year. Well, if I fill out a W-4 and I tell them take 23% out, that should be enough to cover everything. And I could tell them to do that. Deduction worksheets, amounts of tax withheld. So all of this, publication 504. So they go through everything, exceptions from holding. All of this is on here. Penalties, tips. Here's what I was just talking about. Not enough pay to cover taxes, allocated tips, taxable fringe benefits. So they explain all that, which ones are taxable, which ones aren't. Much more things are taxable than you think. And that's kind of what this is all about, right? So pensions, gambling winnings, income taxes withheld at a flat 24% from certain kinds of gambling winnings. Gambling winnings of more than $5,000 from the following sources are subject to income tax withholding. Sweepstakes, wagering pools, including payments made to winners of poker tournaments and lotteries. Any other wager, if the proceeds are at least 300 times the amount of the bet. So then you have to exception. So the bingo, keno from charities, unemployment compensation, federal payments. So let me go down here. I was going to cut to the chase and just estimated tax for 2022. Who must pay estimated taxes? All of this is in here. But again, this is great information. Actually, I probably have a couple more shows with information right from here, because these are the questions that people ask about their tax returns, right? So then there's some examples in here in this example. So this, again, publication 17, you can find it. You can go to the IRS.gov and you can put, in the search engine, put publication 17. This will pop up. All of these questions are in here. I wanted to point this out because this is what I was just going to talk about. When to pay estimated taxes, for holiday, what happens if it falls on a holiday, when to start, all of this. It's all in here. How to figure out underpayment penalties, estimated tax, all of that, pay online. They have all of that. So I'm credit for withholding as withholding, Form W-2s, W-2G for gambling winnings, 1099 series. We talked a lot about that on this show, that now they have so many different 1099 forms. Used to be, 2, maybe 3, and now there's just a bunch of them. There's a list, 15 or something like that. Which form is not correct? Separate returns, estimated tax, divorce taxpayers, what to do then? Underpayment penalties, income and adjustments to income. So this is where we are looking for. So here's and there's, again, your wages. You know that your wages are taxable. This is different publications that explains everything in more detail. Again, one thing about the IRS, they have publications and explanations on everything. They're very, very detailed. Numbers on everything. Employee compensation. So here's interesting. In some instances, your employer isn't required to give you a W-2. Your employer isn't required to give you a W-2 if you perform household work in your employer's home for less than $2,300 in cash wages during the calendar year, and you have no federal income taxes withheld from your wages. Household work is work done in and around an employer's home. Some examples of workers who didn't do household work are babysitters, caretakers, house cleaning workers, domestic workers, drivers. So it goes on and on. So it spells them out. Now, does that mean that means I don't have to give them a W-2? Does that mean they don't have to pay taxes on that money? No, it doesn't mean that. They got to, from whatever source, right? We already talked about that. From whatever source. So miscellaneous compensation. So pay backwards, bonuses, awards, employees' achievements. Here's an example. Ben Green received 3 Employee Achievement Awards during the year. A non-qualified plan award of a watch valued at $250. 2 qualified plan awards of a stereo valued at $1,000. And a set of golf clubs valued at $500. Assuming that the requirements for qualified plan awards are otherwise satisfied, each award by itself would be excluded from income. However, because $1,750 total value of the awards is more than $1,600, Ben must include $150. It gets this. This is why I got to tell you. I know that many people use this, electronic, tax preparation, and it fills all the stuff out. Does all the calculations for you. But I still think that's TurboTax is a problem for most people, because you don't know. It just fills this stuff out. You don't even know if it's true or not. And that's why it's good to have and again, of course, I help people with tax returns, so of course I say that. Excuse me. Severance pay, outplacement, sick pay, fringe benefits, accounting period. Is some interesting things about fringe benefits, about when they're accident or health plan, long-term coverage. I mean, all this stuff, things that you don't even think about. They've thought about it. The IRS has thought about it. De minimis benefits. If your employer provides you with product or service and the cost is so small that it would be unreasonable for the employer to account for it, you generally don't include it in the value in your income. In most cases, don't include your income, the value of discounts at company cafeterias, cab fares home from when working overtime, and company picnics. So when you go to your company picnic, don't worry about it. That's not taxable. That might be the only thing that's not taxable, to be quite honest with you. Group life insurance, when it is taxable, some of it is, some of it isn't. So here's the worksheet they give you. Go through here, examples, another worksheet, examples. So I'm coming to where I want to get to, transportation. And there's a whole list of things. So I'm going to stock options, restricted property, clergy, members of religious orders, foreign employers, military, What's volunteers? Because sometimes if you volunteer, they might buy you dinner. If I volunteer, can they buy me dinner? The answer is generally, yeah, they can buy you dinner, and the IRS will let you walk away without paying a tax on that dinner. Isn't that nice of them? But again, there's very few things that are like that, because almost everything is taxable. Long-term care. I thought we were going to get into it a lot sooner, but again, this is what's all in here. Here, what's this now? Interest income, I believe. So if you have money in a bank account, you're getting interest. You're going to pay taxes on that interest. Tax on certain children, custodian account for kids, all of this. It's all in here. It's kind of amazing, isn't it? Now they have taxable interest. I'm just going to scroll down. I could do days and days of shows on this. Okay, so where are we now? Purchase joint. Who pays tax on U.S. savings bonds? Man, it just keeps going, doesn't it? And I've already reviewed this, and I've looked at a lot of this. There's so many good examples in here. Treasury bills, bonds, what's taxable, insurance, unbelievable. Just goes on and on. And again, all of these will have different. Many of this, they have another form that'll explain it in more detail, very much like this. So long, it just keeps going. Time deposits, when to report interest income. We got to be coming to it. We got to be coming to where I want to look for this now. So Security, retirement, when is that taxable? These are all questions that I get a lot about, I have tax preparers who prepare. I don't prepare taxes myself, tax returns. I do have employees who work here who are the greatest at this. I mean, I've never met anybody better at filing tax returns than Ida and Mike, the two accountants that I have working for me. They're just great. Couldn't do my work without them. They're just terrific. So let me. Okay, when are we going to get to it? When are we going to get to it, Leahy? It's coming. Repayments from old gross benefits. Other income. This is what we're talking about. Other income. Well, what else? And then they go through this in alphabetical order. Here, let's do this though too. This chapter begins with discussions of the following income items: bartering, canceled debts, sales parties at which you're the host or hostess, life insurance proceeds, partnership income, incorporation income, recoveries, rents from personal property, all of this. Okay, again, it goes on and on. Bartering, just go canceled debts, exceptions. They go, and each one goes down there. Right? There it is. So it's got to be coming up here. Recoveries. It just keeps going on, doesn't it? We're getting there. Repayments. But anyway, it's in here. So let me go to stolen. But there was more than that, right? Here's this. And so these are these are all in alphabetical order. Those were S's. So let's go to the top because I just want to show you the what section it's in. This is all, how does anybody know this stuff? All this. Other income. The following brief discussions are arranged in alphabetical order. Other income items briefly described below are reference to publications which provide more topical information. Activity for nonprofit, Alaska, bribes. Okay, so if you receive a bribe, included in your income, that's income, right? Campaign contributions, carpools, cash rebates. This is a very interesting one, actually. Court awards and damages. I get this call a lot about court awards. Generally, if you're working with an attorney and they're going to come up with and you're suing somebody and they made an offer to settle, a lot of times you won't know. Maybe your attorney doesn't know the tax implications because they're not tax attorneys. But you should always understand what the tax implications are, because oftentimes what I found is if people knew the tax implications, they wouldn't settle for the number they settle for. because what happened? You want the money in your pocket. It doesn't matter what you settle for if the money doesn't go in your pocket. So you always should know what the tax implications are. And I think I'll do a show on this because that's how important that is that's so important about understanding what that is. Down payment assistance, employment agency fees, current income required to be distributed, how to report, expenses paid by another, fees for services. Okay, so non-employee information, foster care providers. It just keeps going. Found property. If you find and keep property that doesn't belong to you, that has been lost or abandoned, treasure trove, it's taxable to you at its fair market value. In the first year, it's your undisputed possession. So you find a watch. You try to maybe put some ads in the paper, try to find someone who's in it. They don't claim it. Now it's yours. You got to pay taxes on that watch. You find a diamond ring. Now, have you ever known anybody to find something and then they paid taxes on it? They didn't even know they had to pay taxes. Who knew that? Nobody knows that. Gambling winnings. You must include your gambling winnings in income on Schedule 1, Form 1040, Line B. Winnings from fantasy sports leagues are gambling winnings. If you itemize your deductions at Schedule A, you can deduct gambling losses you had during the year, but only up to the amount of your winnings. If you're in a trade or business of gambling, use Schedule C. They make it very hard to be in a trade or business of gambling. Reporting winnings, inherited pensions, hobby, illegal activities. Income from illegal activities are taxable, such as money from dealing illegal drugs. They must be included in your income on Schedule 1, Form 1040, Line 8Z, or on Schedule C if you're in self-employment. Well, if I'm dealing drugs as employment, I'm in self-employment, so it goes on Schedule C, not on Schedule 1. That's Indian fishing rights. Job interview expenses. Kickbacks. So you must include kickbacks, side commissions, push money, or similar payments you receive in income on Schedule 1 or on Schedule C. I like this example. You sell cars and help arrange car insurance for buyers. Insurance brokers pay back part of their commissions to you for referring customers to them. You must include the kickbacks in your income. Who does that? Prizes and awards. I mean, I guess you're not supposed to take kickbacks. And if you do, you can't really tell anybody, and you don't want to put it on your tax return. But you do. You have to. And again, I'm a tax attorney. So I'm going to recommend that you do these things. Scholarships. Generally, if you work in a gig economy or did gig work, you must include all income received from all jobs, whether you received a Form 1099-K, payment card, or third-party network transaction or not. See the instructions from Schedule C, Form 1040, and the instructions for Schedule SE, Form 1040. Stolen property, and this is what everybody's talking about. If you steal property, and this is big in 2021, right? We've seen the smash and grabs. Think about those guys. They stole all those watches here in Chicago. They were worth $2 million. Those guys have to report $2 million worth of on their tax return because that's the fair market value. But I didn't get $2 million when I sold them on the street. Well, the fair market value is $2 million, and that's what you have to. But do I get a deduction for my hammer that I had to use to break the glass? If you steal property, you must report its fair market value in your income in the year you steal it, unless you return it to its rightful owner in the same year. If you return it next year, you still have to pay taxes. Anyway, these are the union benefits and dues. We can go through this. Strike and lock, utility. So anyway, I just thought it was interesting. You hear it, and then it's like, well, where does that come from? Well, that's where it comes from. So anyway, I thought it was interesting, and we should know. And I spent probably more time on it than I wanted to, but I thought it was interesting. So anyway, thanks so much for joining us here today. I wanted to ask you to. I should have done this at the beginning. I keep forgetting to do this at the beginning of the show, and that's to ask you to like and subscribe because a lot of people don't make it to the end. Like and subscribe, please. We're going to do it at the beginning of the show. I think at the beginning, remember that you can get a copy of my book, Deal with Your IRS Problem. If you go to freeirsbook.com, that's where you start. You have an IRS problem? How do you begin? Go to freeirsbook.com, get a copy of my book, Deal with Your IRS Problem today. So that's where we start. Thanks so much for joining us here today. I appreciate your time. Happy New Year to you and to your family. And we'll see you, I guess as the saying goes, we'll see you next year. Thank you.